The first of these is just ordinary income, right? Money that you've earned over time, either through your own business or through employment income. And you can use income from both yourself or your spouse. If you're an investor, you think about yourself as a family that's investing. So even if your spouse is earning money, that will actually count towards your income as well if you're going to be the primary applicant. And we'll talk about that a little bit more when we get to that section. Another common way is capital gains, right? And this can be in the form of any kind of asset that appreciates over time, and the investor is then able to liquidate and gain more money as a result, right? So this could be anything from purchasing a house from, maybe years ago. That house is now appreciated, that real estate is now appreciated in value. You're able to sell that and basically pocket some of that money and use it for your investment. Or let's say that you've got stock options, you joined a company, you receive stocks as a form of compensation. Those stocks have now appreciated. Maybe you purchased stocks through your own portfolio years ago, played the stock market, and now those stocks have appreciated. So any kind of asset that you've basically been able to purchase, grow in terms of value, and then now liquidate. We'll talk about some of the things to watch out for there, but generally speaking, that will work as a form of funds that you can use for your EB-5 investment. Third, and this has become a lot more common ever since a case called Zhang v. USCIS. That case basically set the precedent for money that can be received from family members, and really just in general, even from any non-institutional type of provider or donator or anything like that. But gifts are totally okay in EB-5. So you can be gifted outright with no expectation of repayment to the investor or the spouse, or this can come in the form of an inheritance as well, right? So let's say you've got a parent that recently passed away. That's unfortunate, but you've now got an inheritance that's coming your way, and all the taxes and everything have been paid. Those funds that you're now receiving as a form of that inheritance can actually be used for EB-5. We'll talk about some of the pitfalls. This is one of the more kind of interesting areas of source of funds, and it can get a little bit dicey. So we'll go into what are the do's and not to do's basically in this section. And then the last, and probably one of the most common ways that we see, is money lent to investor, and not necessarily from an institution, right? This is the other part of Zhang, where you're seeing basically money lent to an investor at market terms, but from a third party. It could be an unsecured loan. It may not even be from an institution at all. It might be a friend. It could be a distant family member. Those are okay. Zhang really set the groundwork for those being okay. It's really the loaner's prerogative to set those terms. But we'll talk about some of those pitfalls there as well. So these are four of definitely what we see as the most common way that investors will source their capital. And one of the key things to remember is you're gathering these funds, and a lot of these different things that we just talked about require some form of taxation, right? When you get capital gains, guess what? You're also going to have capital gains tax. When you're getting a gift, there is a gift tax to be considered. When you're getting a loan, there are other implications there, and you have to report it as a loan on your tax return. So all of these things that require a taxable event, one thing that I really want to point out is you want to make sure that taxes that were due have been paid to the respective governments, whether it's inside the US or out.